Hey, before we get started, I want to talk to you a little bit about annuities. There are a lot of bad actors in our industry that try to push and sell annuities, mostly to people who just don't understand how they work. They sell to your fear, which is so true in marketing today. People try to find what are people's pain points, what they fear the most, and they focus on that and selling their product. Annuities are no different. Annuities are great for the people who develop them and great for the people who sell them, but not so good for the people who buy them. You can go to our website, scroll down to the bottom. We have a PDF you can download on why you should not buy the annuity. It's buyer beware. Why are they trying to sell you that annuity? You can learn more there. Enter your email address, and we will send that to you. Thanks for listening. Welcome to the Wiser Wealth Management Roundtable. We believe the best financial advice should always be conflict-free. I'm your host, Casey Smith, guiding you to financial freedom. Are my co-host with a guest co-host today, Matthews Burnett and Tom Townsend. Hey, Tom.
Hey, how are you guys doing?
Hey, Matthews.
How's it going?
Tom joins us from Townsend Realty Group. He is a longtime Wiser Wealth Management client and friend of myself and the firm. Tom is with the Keller Williams Group and is, I think, you used to be a rising star in realty. Now you're just a star.
Oh, thank you. I was wondering where you were going with that comment.
Yeah.
I was like, gee.
Yeah, people, you walk down the street, people recognize you now. They're like, hey, you're the guy from the Facebook, or you're the guy from the Instagram. You're famous.
We call it Facebook famous. Yes. So we've done that. We did a lot of marketing through social media, and it's funny. You walk into places and people will come up to you and say they recognize you.
That's awesome.
It's pretty interesting. Yeah.
So let's go ahead and jump into this. First of all, I'll add you can find Tom at townrg.com. I got to plug you at the beginning in case we're boring and people drop off. You never know what might happen. All right, so let's talk about real estate. So, man, this is I feel like these are crazy times, and one of the most searched Google terms out there right now is when will a real estate market crash?
Yeah.
I thought that was interesting. It's like, hey, I want to know that too. I better call Tom.
Well, when we get asked that daily, believe me, that's seems to be everybody's concern.
So let's just live in the now. Let's just talk about what's happening now. Tell me some stories. Give me some battle stories of what you're seeing out there with home prices and negotiations and.
Sure.
I mean, I would think a reasonable person would always want to inspect a home, would always want to have a due diligence period. But I'm reading and hearing that to buy a house now, you almost have to take it as is.
Yeah, it is a battle, and we prep our buyers when we're working with them to get prepared, because that is exactly what it is. We're seeing right now so much demand in the market that you're really competing against multiple people when you go and find a house that you fall in love with. And every price point has a little bit different. The battles aren't as big when you get into, $750,000 and above in certain areas. But however, if you're below that, you're ready to battle. So we're prepping our buyers to waive the due diligence period and substitute that with just a period of time that you can inspect the property to make sure there's nothing, quote unquote, major wrong with it, not little nitpicky stuff. We're waiving the appraisal sometimes, or we'll do what we refer to as gap insurance, which means that if the home comes in at a lower value than what you offered, you're willing to make up the difference in cash. So that is very common. We're seeing homes sell for 10, 15% above asking price right now. And the other thing is that we convert a lot of people into cash buyers, right? And so there's some services out there that allow us to do that, and that puts them in it just leverages them up. It's a more appealing offer than if you were to come in with financing. And then, of course, all the traditional, the contingency on the sale of my home, those are out the window. You got to be willing to waive those types of things.
So that creates a whole new problem. If you sell your house, which I'll come back to that in a second, but if you sell your house and you have no place to go, there's not a market for that. There's no market to where do I go for 3 or 4 months.
Yeah.
Right.
Yeah.
So are people able to rent the homes back potentially?
We are. So what we are doing is we're negotiating a post-closing occupancy. That's one of the strategies that we use. So when we sell your home, we're going to negotiate a period of time in which you can continue to stay in your existing home until you find a new one. We will negotiate on your behalf to have the ability to cancel the purchase of your home, your existing home, if you can't find a new one in a certain period of time. And then there's also services out there that allow you to go buy a house right now with someone else's cash. You're basically going to rent it back from them for a very short period of time, and then you can turn around and focus on the sale of your home. So those are 3 different strategies. And then we just had an investor meeting last week, and there are a lot of investors that are converting their long-term rentals into short-term rentals to fill this need for short-term renting.
Yeah.
So we have a lot of investors that are saying, hey, listen, we have a home that you can rent for 2, 3, 4 weeks or even a month until you go out and find your home. So they're filling that gap.
Have y'all seen an increase in those online companies that are always targeting Facebook and everything that are doing that, where they'll buy and sell your home?
Yes, absolutely.
A big increase of those
Yes,
recently?
yes. So there's all types of companies that are now providing that service.
Right.
And there's a cost to it. Don't get me wrong. They're not doing it for free.
Nothing's free.
So you're giving up some of your equity that you may have in your existing home in order to take advantage of that service. However, if you really want to move, a lot of people are saying, you know what, this is worth it. It's worth giving up another $5,000 or $6,000 worth of my equity in order to have that service. But yes, to answer your question, there's quite a few of them out there. And most of the companies, the brokerages like Keller Williams has their own program for that. And then you have some of the other technology companies that are out there doing that as well.
You made me make a note here when you say that, and I hear the stories, people getting above asking.
Mm-hmm.
So you set your price, and then demand's so big that people keep bidding up the price. But when you set the price, what number are you using? Because in a hot market like this, you say, well, I think this house would go for $500. Do you not just list it for $600 and see what happens?
You could, but there's a danger of listing it too high. If you price it outside of the market, you're not going to attract the buyers. So from a marketing standpoint, when I take a listing, my goal is to attract people to your home. One of the ways that we do that is having a realistic price. I want interest in that. Just think of a sale. When there's a sale, everybody knows it's a great deal. Everybody's going to show up for it. The difference is that now we know that you're competing against each other, right? So we're creating a bidding war, which escalates that price. Okay. So yeah, you still want to price it at market, what we refer to as market value. And market value is really determined looking backwards at prior sales. It's not looking forward, but it looks backwards at closed sales.
Right.
And we tell our listing clients, let's price it at market value. And in this crazy market that we're in, I can't really predict where we're going to be.
Right.
To be honest with you, but we got to market it at market price. The market itself will bring that price up to what the true market demands for your home. It'll naturally bring that up through the competition.
So in times like this, we see a lot of new people decide they want to sell homes. During the financial crisis, it weeded out a lot of real estate agents that sold 1 or 2 houses a year,
mm-hmm.
right?
Yeah.
As almost like a hobby. Are you seeing just a tremendous amount of people entering the real estate market as a profession now?
We are, for a couple different reasons. Listen, this last year with the pandemic, the service industry really took it on the chin. And so we're seeing a lot of those types of people entering in the market, looking for an alternate career. So we're seeing a lot of people in that segment. So we are seeing a lot of people enter in. Plus the hype is, man, the market's crazy hot. And so people are naturally attracted to that, right? They want to take advantage of that. So we are seeing that. So yeah, we are. But they quickly find out this is a tough gig. I mean, it's tough. This is no cakewalk, even in a hot market. It's tough.
There was a trend there too for a while to have flat fee listings. Has pretty much all that gone away now?
No, it's still out there. It has a place in the market, and you really have to determine and sit down and consult with a client to find out what's best meets their needs. And the flat fees, they'll provide a certain level of service, and then a majority of the burden is going to be placed on the homeowner, right? If we're talking about a listing, and you just have to talk. Are you ready for this burden? Are you ready to take on this specific burden? Because you're only going to get so much services for a flat fee,
right?
And a lot of that burden is going to be on your shoulders. And we talk through that. And some people are like, after they look at it and we look at the numbers that are associated with that and how much they're actually going to make compared to the time and stress that they're going to have to go through and taking the burden on, it's really their determination on what they want to do and what best meets their needs.
There's some comparisons we talked about at the very beginning about a bubble, and people talk about the stock market or a real estate market bubble forming. Mm-hmm. This looks very different than 07 and 08. I know that there's probably bruises still from 07, 08, especially from an investor standpoint in real estate. But what are you seeing that's different? You were an appraiser during 07 and 08. You've been in this industry for a long time and in various different parts of it. But what are you seeing that's different?
Well, let's first take a step back and understand that the Great Recession, real estate was at the epicenter of that. And that was really caused by a very unstable financing that supported the real estate market at that time. Where we're at now is very different from where we were at back then. Real estate is very healthy from a financial stability standpoint. The financing that is supporting real estate now is much healthier than it was back in 08 and 09. Any kind of a setback that we do have in the economy that we see right now, real estate is not at the epicenter. It is an outlier of that. So that's the major difference. And just understanding that the big piece that I have been told by economists is that the financing that supports real estate is so much healthier than it was back then. I mean, we were selling houses to anybody that had a heartbeat back in 2005 through 2009.
Right.
And you didn't have to verify
it was like a fundamental right that everyone must be homeowners.
At least one.
Yes.
You'd have, folks that probably had no right in owning, one home. And you'd find out that they had 5. You're like, oh, you're kidding me.
Right.
You have 5 homes and you do what now?
Yeah. I saw an article, the average credit score had significantly increased. So these are quality loans that people are getting. There's just a higher demand for them, whether it has to do with obviously historically low interest rates. That kind of, I feel like, pushes that during the pandemic times.
And I feel like everything that I've read and the data seems to support that the down payments are much bigger now. We're not doing 3% down payments or no down payments. We're doing, in reality, somewhere between 20 and 50% is going down when they're purchasing homes.
Yeah, I don't have a stat for that. However, that wouldn't be surprising. I mean, I definitely see people putting down a lot of money on their homes now. There still are programs out there that you can put 3% down, FHA,
right.
Some VA loans.
First-time home buyers.
Yeah, and VA.
Yep.
VA has a program where
Yep.
they allow veterans to be able to put very little down. I don't know. I would love to see the stat of how many of those loans are written compared to like a conventional 20% down.
Right.
And I don't have that stat here in front of me, but I wouldn't be surprised if, people are statistically putting a lot more money down on the homes.
Well, you've seen a lot of these where people were trying, like you mentioned, all cash deals. So I feel like it'd be hard depending on the tier of the home you're trying to buy. If they're taking an all cash deal, it's going to be tough to put a small percentage down and be able to acquire some of these homes.
Yeah, and before we started recording, you were telling us that there's the stats that we see, but you've witnessed home purchases or sales that don't even hit the stats. They're private.
Yeah. So when you really talk about the law of supply and demand, which is the major law that drives real estate, the big crux is the increase in demand that we have, not necessarily the decrease in supply. If we look at the supply of homes that we've had this year, like year to date 2021 compared to 2020 was an outlier. Talk about a crazy year. But even 2019, it's pretty stagnant. It's pretty stagnant. The difference is the demand has just doubled. So we have more buyers in the market then we have homes, and that's where that comes from. But yes, so what's driving, to answer your question, is that homes are selling before they even get to the market. So let me give you an example. I may have somebody call me up, say, hey, I'm interested in selling my house, $350,000. We'll look at it. I've got 4 buyers that are ready to go, qualified, and they'll buy that home. So I go back to the seller and say, hey, I'll give you a full price offer. I'll waive all of these things. I'll give you a really attractive price, and you don't have to go to market. You don't have to clean the house up. You don't have to have the world come through your home.
Right.
You don't have to show it.
Right.
Are you ready to go? And they'll be like, yeah, let's do it. And so you do the deal before it even hits the market. That's happening quite a bit. So depending on what stats you're looking at, when you say, wow, sales are really far down, it's because they're selling before they ever get to the market.
There is a level, and I'm sure it's in every market, but here in Marietta, there is a group of people. We'll just leave it there. That would never list their home. They would have always sold their home that way because they don't want their home opened up to the world. And this home is available for private sale, but you wouldn't know it unless you knew the right people.
That's right.
Right?
There's a whole network for that.
And now supply and demand has now provided that down a few more notches.
Very good point. Absolutely.
So it's not that that's unusual. That's how the elite would normally be selling their properties, but not. Now the rest of us get to participate in the same kind of thing just because of supply and demand. But I guess that what we should have talked about at the beginning, I'll throw it right here in the middle, is why are we like this? Why is it happening like this? Why are things so expensive all of a sudden?
Well,
we know the
relative.
answer at the table, so let's share it with everyone else. but one, supply.
Mm-hmm.
So there aren't enough good homes to meet the demand of the buyers.
Yeah.
Right. So then the second is we have the lowest interest rates ever. In fact, 15-year dropped down to 1.99% again here last week or so. Then on top of that, we had a pandemic where everyone sat in their homes and said, I really hate this place and I really want to go somewhere else, right? Which increased the demand. And then on the new home side, for those who want new homes, there's not enough labor to get those homes built timely. I mean, literally, I had a client sitting in here who has a relative who sells new homes. Like they're one of the people that sit in a sales office, and people come to them. And the builder's like, I can't quote you. Yep. I can't quote you what's on tell you. I can't tell you what's on cost to build this house because the price of lumber, the labor shortage. I can just go build it and see what happens. I give you a ballpark, but I can't give you an exact quote.
Well, you saw lumber go up 3 times in a month, so that's kind of tough to quote that when it's spiking that much.
Exactly. Now, I don't know that the lumber cost stays high. Real estate market can still stay hot for a while, but I don't know that the lumber costs. That's a unique. We covered that in one of our 5 and 20s on our YouTube channel, but I think that rectifies itself over time. You just have a shortage right now.
We do.
There's tons of trees.
Yeah, the supply chain is just messed up.
If you have trees, building trees. If you're growing trees and you're trying to sell trees, you're getting the same amount of money as you did in the 1980s. Mm-hmm. So those people are getting
the stump fee.
The stump fee is the same, but the mills are getting a premium right now.
Yeah, and that's just that.
And they shut down. They just shut down during COVID.
Yes,
but yet building just kept going on. That'll rectify itself. I don't know how long it'll take, but I don't think that causes a housing market a change.
Well, it does because it's taking some supply off of the market on the new construction side.
Potentially, yes. So we can keep building, but how big is the demand? How do you measure the demand? It could be that they just officially meet the demand. So who knows?
Yeah, it's hard to say. When we talk specifically regionally here, I know the demand is pretty dang high. I mean, we've got an influx of people coming to this market area. Our area is growing, which is one of the major contributors to the demand.
All your clients have northern accents now?
New York, New Jersey, the New England states, California, big time.
Oh, yeah.
We're getting a lot of influx from California. Either people moving here to start over kind of a new career, or they're retiring here. So
in Georgia.
Yeah.
Not Austin, Texas.
Well, they're going there as well. They have a choice.
It's too pricey.
Florida.
There now, too.
They're going to Florida, Texas,
Florida, yeah.
and
I feel like they always
Carolinas.
go to Florida.
They go to Carolina. So the southern states. But we get a lot of migration from those areas, and even in the Midwest. I get clients from Michigan, Northern Ohio, some of those states. Not as much Ohio, but a lot of Michigan.
I feel like everybody in Ohio goes to South Carolina.
Yeah, it could be.
I do. I go down to Hilton Head for vacation,
And they're all from Ohio.
they're all from Ohio. It's funny.
We travel in packs.
A bunch of minivans, and they all say Ohio on the tag.
Exactly. And I think Michiganders usually they go down to Florida. There's a lot down in Florida.
Yeah. God, that's a long drive.
Yeah. Yeah. Well, they're moving. They're leaving
okay.
Michigan and they're
It's a
going
U-Haul.
back.
It's a U-Haul. They're not just visiting.
Yeah. So we're seeing those migrations. They're coming in. And Atlanta, if you look at the metro area of Atlanta, it is very affordable if you look at similar metro areas around the nation. Compared to Atlanta, it is very affordable here. So that was one of the other factors that we look at when people say, well, when is the bubble? When is this thing going to end and crash here in our metro area? Hey, you compare us to other similar metro areas, we're very affordable nationally. It's still very affordable to live here.
So that means there's more room to run because real estate is very much local. Where we could be having a boom, someone else could be having a bust.
Yes. Yeah.
Detroit would be a good example.
Yes. Yeah. Exactly.
Yeah. So let's talk a little bit about affordability. I think we just established that, though, that officially, that when is it going to crash? I don't know that it will.
Yeah, we don't.
It'll probably just plateau is what
Yeah.
it looks like now.
Yeah, we really don't have a crystal ball. And I'm not an economist, but I rely on quite a few experts that tell us that. And with all those factors that we have talked about already, this is not going to change anytime soon. At least, they say at least for another 2 or 3 years. They don't, unless, of course, we have something major happen.
Yeah.
But if we continue at this pace, this market is not going to change. The values are going to continue to climb. Now, I don't know if we mentioned it. Values over the last 12 months in the metro area, we've seen an 18.5% increase in value in a 12-month period.
Wow.
That's crazy.
It is crazy.
That's not sustainable.
I see it in my Zillow report for my house here.
Yes.
I get emails and I'm like, what? No way. And then a house goes up for sale in my neighborhood, which I live in a very small neighborhood, but one house went up for sale. Now it has been refreshed, we'll say.
Okay.
And I'm looking at that number and going, there's no way I'd pay that for that house. That's crazy. And so part of me wants to get caught up in it and go, well, I'm selling. I'm just going to sell. And then I go, okay, where am I going to go? I'm like, there's nowhere to go.
Yeah. Yeah. Well,
right.
Well, here's the deal. When you look on your own, there's nowhere to go because agents have all those listings. We call it pocket listings.
Yes.
Right. You mentioned it. That
That's
luxury market, that's a very tight network that doesn't throw their houses out to the general public.
Right.
That's why you need an agent.
I have an agent. He's right here.
Yes. But yes, you do. You need an agent really working on your behalf to go out there and look for those homes. And we will network with other agents that have those pocket listings, that have listings coming on the market.
Right.
And you have to sell your buyer to them. You're saying, I have a buyer. They're looking for boom, boom, boom. These 3 things. Do you have anything? So this is old school real estate. This is how we used to do it way back when, right? You network with all the other agents to find out what they had and what they had coming up. So we're back to that. So,
but shifting gears a bit though, if let's say a person wants to buy a lot and they want to build, I just wonder if now's a good time to be building. If you shouldn't be waiting a couple of years to build, wait for the prices to normalize somewhat.
If you're looking at it purely from a financial standpoint, it may make sense for a client, but you really have to dive into why do you want to build right now? I mean, what does it mean to you?
Yeah.
They may be in a situation that they're like, listen, we're done. We've got to do something. And their motivation to build is right now. And are they going to pay a little bit higher than that they would have? Yeah, maybe. They may end up paying next year's values right now.
Yeah.
And so for the next 12 months, they're going to have to make up or just wait. But if they're looking, anybody that's building is probably going to be long term.
You would think.
You would think.
Like their final home kind of a scenario.
So in your world, it's just like day traders. Are you really worried about what's going to happen on the next day?
I don't know any day traders.
Yeah.
What is day trading exactly?
But when we talk about the values of home, you have a lot of people that ask, is a home an investment? And technically, historically, it's just there to keep up with inflation and somewhere where you can have a roof over your head. It's not.
I don't think your primary home's ever your investment.
Correct, but if it's getting 16% returns annually, I can see how it changes people mentally.
Makes
the way
up.
they look at it.
That is not sustainable.
Correct.
It's not.
It just makes up for the like the 5 last paint jobs that.
Right, but you said it's the same way as day traders are doing that. I can see some people thinking that this is an opportunity that they can make not understanding the way mortgages work and think this is a easy end to make a little bit of money when they're buying homes.
Wow. Being a day trader with real estate is risky because it's not an asset that can be easily liquidated, right?
So flipping, you see more flipping?
Yes.
Are there values in flipping?
Yes.
Well, I guess there is because what's the sweet spot? 150, 250?
Really, every investor's got their own little sweet spot. If you were to gather all the investors together, really anything below 300 right now in the metro area. Now, I'm not talking about downtown, but I'm talking about the outlying areas, Cobb County, Cherokee.
Is it like lipstick on a pig kind of stuff? Or
no,
is it
some of them are
just
beautiful.
Complete gut?
Yeah,
rebuild?
some of them are great. Some of them do a little bit less modification. It really depends on the market that you're in, the subdivision, that specific subdivision, and what buyers are demanding in that subdivision. You mentioned it earlier. Real estate is local.
Right.
So depending on what the demand is there locally is going to dictate what level of renovation you're going to do. But yes, flipping is alive and well.
I'm surprised that's still the case, but I guess maybe the numbers are just different. It used to be if you want to start a rental or flipping program, you bought something between $60,000 and $80,000 in an area that you wouldn't want to live in, and you make it look good, and you put it back. You do a search for that. There is no $60,000, $80,000 home. I did find a whole neighborhood in Columbus, Georgia, by the way, when I searched for that.
Yeah,
so if you
probably.
I
don't
know what's going on in Columbus.
No, you can go outside of the metro area and find those. And that's what a lot of investors are doing because it's competitive here in the metro area.
Yeah.
There's a lot of people, a lot of investors that are looking to make a buck or two. So there are a lot of mom and pop investors, and they are going to the outlying areas where other people aren't.
Private equity, are they still active in purchasing?
Yeah, hard money, private equity, partnerships, limited partnerships.
Do you think they're being drawn in because of the increase? I mean, if they're...
What do you mean by drawn in?
Well, 13% nationally, 18% locally increases in values. You think they're being sucked in because they think this is going to continue on?
Sure. I mean, just follow the big guys.
Yeah.
The national buyers of real estate.
Your BlackRock.
Correct. They're buying. So everybody's like, when's the crash? These guys are buying. They're buying everything they can get their hands on. So
that's
they're pretty smart. They got some smart people in there doing some analytical work. So they're analyzing the market.
They've pretty much been buying since the financial crisis. They
have
basically, I think, put a floor on the market just here in Atlanta by coming in and buying up anything and everything.
Yeah.
It's amazing how they manage it.
I know.
Right?
Well, and that was, that was the big talk a while ago. They're never going to be able to manage all these residential properties. They sure are. They figured it out. They did. Because they were, historically, I think they were commercial. And there was like, hey, commercial and residential are two totally different worlds. They're never going to be able to manage, the residential world, but they have.
So let's talk a little bit about affordability.
Yeah.
We've talked with other guests or our own selves in our own podcast here that the wealth gap is getting bigger, and we see it. We see it in country club memberships. We see it in other areas, but specifically in housing. There's a gap that's forming because you have whole industries that are completely decimated right now, and people are out of work, so we have all the stimulus. But then you have people getting the stimulus who are very much gainfully employed.
Yeah.
Right.
Yes.
And now we're seeing this run up in home prices. I mean, are we not pushing people out? Are we pushing them into rentals?
Unfortunately, we are. I hate it. It kills us. It really does. As service providers, people that love to service people, I hate to see this gap growing, but it is. This last year, the pandemic, the service industry has taken it on the chin. those folks are hurting. They really are. And so, yes, they have been priced out of the market, and they've been priced into rentals, and the rental market is going up, and it's even harder for them. However, on the opposite side, we are seeing people that are making more money and gaining more wealth than they ever have. And so that's what's driving the pricing. That's one of the factors that's driving the price up. And their affordability is just fine. They're good. They're making more money. You mentioned the membership at the country club is going up. There's some people that are making some really good money right now. So everybody's got to do a gut check, right? Everybody's got to internally say, is there an opportunity in this crazy world that we're in that I can better myself? And, that's outside of this conversation probably. But yes, we're seeing a gap there. We really are. And unfortunately, people are getting priced out of the market.
Well, I mean, I live in the city, so I've kind of seen this firsthand. There are a lot of rentals, but you walk around the neighborhoods, and there's not a home for under $700,000. And we're not talking about mansions. We're talking about 1,700 square foot homes. And they're getting gobbled up. People are buying them. So
they sure are.
It's tough for first home buyers to start a family in that home and pay $800,000 for it.
Yes. And so we're seeing a lot of people flood to the suburbs because it's more affordable in the suburbs, right? So a lot of first-time home buyers in the suburbs. But yeah, you get inside the perimeter and you're getting into some of those areas, absolutely. It's very expensive. And there's that demand is still there.
Right. Yeah, they're getting gobbled up. People are buying them for sure.
Yep.
That'll be interesting to see, home ownership's not a right, it's a privilege. And that's where we got wrong back in 5, 6, 7, right?
Yes.
Giving loans to people who had no ability or to service the loans in the end. So it'll be interesting to see how that changes. It could be that maybe the South is becoming more like New York, not like state, but Manhattan, right? And that the city and the nearby suburbs push you out. The difference is here we don't have mass transit to bring people in from Rockmart, bring people in from Ringgold,
correct? Yeah,
right. To bring people in from Conyers into the city.
Yeah,
where in New York you have that ability, but at the same time, have you not seen more people trying to leave the city to the suburbs?
Yes, we did.
So there's some of that too.
Last year we saw a big exodus. Now it has subsided over the last few months. We're not seeing that as much, but yeah, last year you bet people were flooding out. They really were. One, they don't have to commute down there any longer.
True.
So the thought was, I'll tell you where it's booming right now is up in the mountains.
Everybody wants
people
to go to the mountains.
People are flooding to the mountains. Yeah, last year it was crazy. They couldn't build homes fast enough up in the mountains because people were flooded. They were all remote workers now. They're like, I can work from anywhere. You got internet? Okay, cool. I'm good.
Right.
So they were flooding. So that was a huge talk about migration patterns. There was a huge exodus of.
It's amazing how people live in the now. Isn't it?
Yes.
Like if you're in the pandemic, is it always going to be a pandemic?
Yeah. Yeah. Are they ever going to call me back into the city?
So I'm going to go work remote. So I'm going to uproot my life. I'm going to move to the mountains, not thinking that a year from now that the boss is going to be like, hey, we're all coming back in now. And so everyone's be commuting from LJ, right? I don't know. I'm sure it's more detailed than that, but that is not society today where we all live in the now.
Absolutely it is.
I mean, I guess at this point, maybe it worked out well. They can sell their mountain house for more than they paid for it, and then
hey, they made 18.5%.
That's right.
Flip it and come down here.
Moving does not sound fun to me, but people do it all the time.
It can be complicated and very stressful, and that's why we as agents jump in the middle and we take that away from people. We take the stress away and make it easier for you.
All right. So in summary, I think we've solved that. Real estate market will continue to get hot, be hot, maybe get hotter even potentially. We've got a couple things that the market has to solve. It's building materials, it's labor, the demand. It's not just locals moving around. It's also people coming from out of state into our environment. I don't get into politics, but all those people who hate red states, there are a lot of blue people moving here into the red state, which is very, somewhat red, purple, very purplish now. But that's going to change a lot of things, I think, for Georgia going forward, maybe for the good, hopefully, maybe for the bad. We don't know yet. thanks for your time, Tom, and
thank
coming in
you.
and joining us.
I love it. I thoroughly enjoyed it. Thanks for asking. Appreciate
Tom, it's townrg.com. Tom Townsend, Keller Williams. Again, thanks, Tom. Talk to you later.
Thank you, guys.
Thank you.
Thanks.
Hey, thanks for listening. If you like what you heard today and want to hear more, you can find us on YouTube as well. You can go to Wiser Wealth Management and be sure to subscribe. I do a weekly 5 and 20 with Brad and Matthews, covering 5 topics in 20 minutes that are in the news. We also have our weekly blogs. Matthew's probably our largest blogger in content. You can follow him and Brad and myself on our blogs there, also on our website at wiserinvestor.com. Additionally, if you have podcast topics you'd like for us to cover, we are always open to new ideas. You can send that to our marketing and brand manager, Hadley Glenn. It's Hadley, Hadley, at wiserinvestor.com. Thanks for listening. Make it a great week.